Assalamu alaikum wa rahmatullahi wa barakatuh. Once again, I welcome you, my students, to this beautiful e-learning program of the CTY group of schools. And this one is for the senior secondary school. Precisely, this class is meant for the financial accounting senior secondary school 2. And as we all know, we are in the fifth period. We are in the 5th week of the 3rd term of this academic session, and the topic we are so far been discussing is account of non-profit making organization. And having discussed how to prepare the receipt and payment account, and having looked at what are the contents of an income and expenditure account, then today we need to discuss the preparation of subscription accounts, statement of affairs of a non-profit making organization, income and expenditure account, as well as the balance sheet of a non-profit making organization. And this class is prepared by Mr. Ishabi Yehoho and Mrs. Account Ss2. So today we are going to be having illustration on preparation of subscription accounts, statement of affairs, income and expenditure account, as well as the balance sheet of a non-profit making organization. Without wasting our time, let's quickly look at the question to be solved as the illustration on the topic. Question: the following is the receipt and payment account of Account Social Club for the year ended 31st December 2014. We have the receipt and payment account, which has the debit and credit side, and the denominations was naira on both sides. We have cash in hand as at the beginning of 2014, 2014, 500 naira. Cash at bank as at the beginning of 2014, 1000 naira. We have subscription, and this subscription is based on the year for which they are meant for. So though they are collected in the year 2014, but the year they are meant for are 2013 1200 naira, 2014 4000 naira, and 2015 2300 naira. So the total of the subscription collected during the year 2014 was 7500 naira. Then we have donation of 2000 naira, as well as the end of the year show, which realized 15,000 naira, and transfer from deposit account of 3,000 naira. Transfer from deposit account of 3,000 naira. Then we have on the credit side of our receipt and payment account, from the question, we have purchase of sports equipment, that is this sports equipment that was bought during the year, 1,800 naira. Repairs of 1,500 naira. Salaries was paid for 1,700 naira. Insurance of 1,000 naira was paid, and 3,200 naira was spent on the shoe expenses, and transport expenses cost 500 naira. While the secretarial expenses stood at 300 naira. And during the year, furniture was also purchased. That is purchase of furniture, 3,000 naira. Therefore, we have the balance carried down of 16,000 naira from our receipts and payment account. 16,000 naira from the receipts and payment account, and we close the account with the total of 29,000 naira on both sides. Additional information from the question, we have equipment was valued at 3,250 naira, and furniture also was valued at 1,550 naira as at 31st December 2013. That is telling us that the value of the furniture and equipment as at the beginning of the year was 1,550 naira for furniture and 3,250 naira for equipment. We have depreciation to be provided as 505 for equipment, 55 for furniture. That is equipment 505 naira, furniture 55 naira. Then we have the following expenses we are outstanding. The following expenses we are outstanding: 300 naira for salaries, that is salaries owing as at the end of the year, that is yet to be paid, 300 naira, transport yet to be paid 100 naira, and repairs yet to be paid 250 naira. Then we have subscription owing by members as follows. Then the subscription that was not collected for 2013 was 1,200 naira. That subscription owing by the members as at the end of 2013 was 1,200 naira. But for 2014, the subscription that is yet to be collected for the current year 2014 was 2,100 naira. Additional information 5 says that the balance in the bank deposit account at 31st December 2013 was 3,000 naira. The balance in the bank deposit account as at 31st December 2013 was 3,000 naira. So you are required to prepare statement of affairs as 31st December 2013, subscription account for the year ended 2014, income and expenditure account for the year ended 31st December 2014, and balance sheet as at 31st December 2014. Those are the 4 accounts the question is requiring us to prepare. So without me wasting our time, let us look at how to prepare all those accounts that are required by the question. Then we have the first one is the statement of affairs as at 31st December 2014. That is, this statement of affairs will be the one as at the beginning of the year 2014. It will be the one as at the beginning of the year 2014 because it is the one that ends the year that was prepared as at the end of the year 2013, which will automatically become the one for the beginning of the year 2014. So Account Ss2 Club statement of affairs as at 31st December 2013. There will be no need for debit or credit because statement of affairs is a statement and not an account. So from the question, we have the value from additional information 1 as at the end of the year of 2013, as at the end 31st December 2013. In additional information 1, we are informed that the value of our equipment was 3,250. Then the value of furniture was 1,550 naira. So by adding the two together, which are our fixed assets, we have the total value of 4,800 naira as the fixed assets as at the beginning of the year. The current asset that we have the subscription owing. That is the value of the subscription owing as at 31st December 2013, which was yet to be paid as at 31st December 2013, which stood at 1,200 naira. Which, as in that one was stated in additional information number 4, 1,200 naira for subscription owing 2013. Then bank deposits. The bank deposits, that is the transfer from bank deposit of 3,000 naira. We have cash in hand of 500 naira. That one is the cash in hand as at the beginning of the year, 500 naira, which as stated in the receipts and payments account. cash in hand 1/1/2014 500 naira. Then we have the cash at bank as at 1/1/2014 1000 naira as stated in receipts and payments account. So the total of the current assets stood at 5,700 naira. So you need to add the total of the current asset to that of the fixed asset to have the total value of the assets. So we add 5,700 to 4,800. We have 10,500 naira as the total of our assets. Having critically looked at the question, there is no liability as at the end of the year 2013. There is no non-liability as at the end of the year 2013. Due to this, the total value of our assets will now be used as the accumulated fund, since we do not have any current liability. Since we do not have any liability as at the end of the year 2013, so the total value of our assets will now be our accumulated fund. And as I always tell you, accumulated fund of a non-profit making organization is the same as the capital of a profit making organization. So the accumulated fund derived from this statement of affairs as at the end of the year 2013 is now 10,500 naira. So we have total of 10,500 on both sides. Having done that, the next account requires to be prepared is the subscription account for the year ended 31st December 2014 of Account Ss2 Club. Subscription account is an income account and it has debit and credit side. So we have Account Ss2 Club subscription account for the year ended 31st December 2014, debit and credit side. Then now we need to take it easy while preparing subscription account. From our receipts and payments account, the total of subscription collected in the year 2014 stood at 7,500 naira, out of which we have 1,200 for 2013, 4,000 naira for 2014, and 2,300 for 2015. So how are we going to solve the question? We have the receipt and payment account, that is the total amount collected in receipt and payment account, 7,500. Then we have the amount owing by members as at the end of the year 2014 as stated in the additional information number 4, 2,100 naira. So by adding that 2,100 naira, the amount owing by the members at the end of the 2014 to the amount collected of 7,500, we have the total of 9,600 naira. 9,600 naira. So from this 9,600 naira, we need to deduct the balance brought forward on the debit side. On the debit side of the subscription account, which is the amount of subscription owing as at the end of 2013. And since 2013 is not part of 2014, therefore we have to deduct that amount of 1,200 naira of 2013, which was collected in 2014, from the 9,600 that we have. Then we have 8,400 naira left. Then from this 8,400 naira, we have to deduct the amount paid in advance. The amount paid in advance of 2,300 naira. The amount paid in advance of 2,300 naira as stated in receipt and payment account under subscription 2015. Subscription 2015, 2,300 naira. So you have to deduct it because it's a prepayment for 2015 and it's not made for 2014. So you have to deduct that 2,300 from 8,400 naira then we are going to be having 6,100 naira. That 6,100 naira is the total amount or the total value of the subscription made for the year 2014, and it is going to be credited to our income and expenditure account. So as you can see, we have denomination naira, we have balance brought forward 1,200 naira, we have income and expenditure account 6,100 naira, we have balance carried down of 2,300, we have total of 9,600 on the debit side of our subscription account. Then we have receipts and payments 7,500 and balance carried down of 2,100. Added to it, we have 9,600 on both sides. We have 9,600 on both sides. The balance carried down will now be brought down to the next year. Then we have the balance carried down of 2,300. The balance carried down of 2,300, that is the amount prepaid for next year, will be brought down to the credit side of the subscription account, while the amount owing for 2014 will be brought down to the debit side of the subscription account. From there, we are required to prepare the income and expenditure account. The income and expenditure account, and as you know that income and expenditure account is equivalent of the profit and loss account of a profit making organization. Therefore, we are going to be having the expenses side as well as the income side, and as we know that the expense side is the debit side while the income side is the credit side. So from the subscription account we have 6,100 naira. Since the subscription account was debited, the income and expenditure account will be credited with the subscription value for 2014, which stood at 6,100 naira. Then donations received, as stated in the receipt and payment account, 2,000 naira. The end of the year show, the amount realized from the end of the year show 15,000 naira. All our income to the income and expenditure account. Then on the part of the expenditure, we have repairs, payment for repairs. And since, let me quickly explain this. Income and expenditure account is a nominal account. It cannot take into note capital receipts and capital expenditure. Due to that, we are not going to bring in purchase of equipment, sports equipment, and that of furniture. So we start with repairs. So our repairs, we have repairs paid, payment for repairs 1,500 naira in our receipts and payments account, and we have in additional information number 3 that is repairs that is yet to be paid was 250 naira. So by adding 250 naira to 1,500, we have 1,750 naira for repairs for 2014. Then salary, we have salaries of 1,700 naira paid from receipts and payments account. Then we had 300 naira, which is the value of salary owing as at the end of the year 2014, as stated in the additional information number 3. So you have 300 naira to 17, you have 2,000 naira. Then transport expenses also, you have transport expenses paid in receipt and payment 500 naira. Then you had 100 naira, which is the which is the transport owing as stated in additional information number 3. So 500 plus 100 naira, that gave us 600 naira. That gave us 600 naira, not 6,000 naira, 600 naira. So 500 plus 100 naira, that's 600 naira. Then we have insurance paid as stated in the receipt and payments account 1,000 naira. Show expenses 3,200 naira. Secretary expenses 300 naira. More so, we have to add the depreciation. So the depreciation on equipment was 505 naira, as stated in additional information number 2. Equipment 505 naira and furniture 55 naira. So totaling the expenditure or expenses of Academic Social Club, we have the total of 9,410 naira. By comparing 9,410 naira of expenses to that of income, which stood at 23,100, we are having surplus of 13,890 naira. So deduct the total of the expenses, 9,410 naira, from the total of the income, 23,100, you have the surplus of 13,690 naira. So having done that, you add everything together, you have the total of 23,100 on both sides of the income and expenditure accounts. Finally, the question requires us to prepare Academic Social Club balance sheet as at 31st December 2014. That is the balance sheet as at the end of the year 2014, which is the year in question. So we have Academic Social Club balance sheet as at 31st December 2014. We have the denomination as naira. Then starting from the right hand side, we have the fixed assets. And we have equipment. The figure of the equipment in the solution is 5,050 naira. How do we arrive at that? We have to add the value of the equipment as at the end of the last year, which was stated in additional information number 1, 3,250, plus the purchase of equipment as stated in receipts and payments account, which stood at 1,800 naira. So 1,800 naira plus 3,250, you have equipment value of 5,050 naira. Then from that, you have to less the depreciation for the year as stated in additional information number 2, which stood at 505 naira. So deducting 505 naira from 5,050 naira, you have the net book value of the equipment, which stood at 4,545 naira. More so, we have the furniture. The value of the furniture as stated in additional information number 1 was 1,550 naira, and during the year, the one amounted to 3,000 naira was purchased. So you have to add that 1,550 naira plus the new furniture bought during the year 2014 as stated in the receipts and payments account, 3,000 naira. So you had 1,550 plus 3,000 naira, you have 4,550 naira. Then you less your depreciation as stated in additional information number 2 in our question. So less 55 naira from 4,550 naira, you arrive at the net book value for the furniture, which stood at 4,495 naira. So 4,495 naira of the furniture to that of equipment, which stood at 4,545 naira, we have the total fixed asset of 9,040 naira. Then current assets. Our current asset, the only item that we have as a current asset was the subscription paid for the subscription owing as at the end of the year 2014. The subscription owing by members at the end of the year 2014, which stood at 2,100 naira as stated in additional information number 4. Then added to the balance of our receipts and payments account, 16,000 naira. The balance of our receipt and payment account, 16,000 naira. So we have the value of our current assets, which stood at 18,100. So by adding the current asset to the fixed assets, we have 18,100 plus 9,040 naira. We have the total value of 27,140 naira. That's the right hand side of the balance sheet. To the left hand side of our balance sheet, we have the accumulated fund, which was calculated or which was determined by the preparation of our statement of affairs as at the beginning of the year. So the accumulated fund of 10,500 naira as decided in the statement of affairs. Then you add the surplus, that is the surplus that we get from income and expenditure account. You add it to our accumulated fund, and the surplus was 13,690 naira. So add it to 10,500 naira, you arrive at 24,190 naira. From there, what are our current liabilities? We have the subscription, that is the subscription paid for 2015 as stated in the receipt and payments account. 2,300 naira is a liability on the business as 2014 because it's the payment for 2015. The repairs that is yet to be paid, 250 naira. The salary that is yet to be paid, 300 naira. And transport expenses that is yet to be paid, 100 naira. So by adding all these items together, we arrive at 2,950 naira as the value of the current liabilities. So we have to add the value of the current liabilities to the value of our accumulated fund plus surplus, which was 24,190 naira. Then we arrive at the total of 27,140 naira. So by comparing the two sides of our balance sheet, we can now say that our balance sheet is totally balanced with the figure of 27,140 naira on both sides. That's the convenient point for us to round off our class for today. Assalamu alaikum wa rahmatullahi wa barakatuh.